Welcome to Commerce Gyan. Now, this is part 7 of our Basics of Accounting video series, and today we are going to learn ledger accounting. Earlier, we had learned in the previous video journal entries and a little bit of complex journal entries, which will help you to actually get the knack of solving the journal entries and not get confused with those typical difficult ones where people often make mistakes in writing the books of accounts. So hopefully you've understood a lot of things from that video, which was related to complex journal entries, part 6 of our video series. So now let's proceed to part 7 of Basics of Accounting, where we are going to understand the second step of accounting, that is ledger accounts. Before we proceed to learning of the ledger accounting, I just want to remind you that if you are not yet a subscriber to this channel, please do subscribe, because I'll be posting a lot of free content on this particular platform of Commerce Gyan, where you're going to learn a number of things connected with subjects of commerce, and at the same time you will be learning day-to-day commerce also, which we find certain practical things happening around us, and we will be discussing that on this channel. Basic accounting definition, if you remember, we had studied that accounting has steps. So what are those steps? Steps were like recording, classifying, summarizing. So we'll remember these three. First, recording was when the transaction took place. We placed that transaction in the format of a journal entry. So we record it. Then classification and summarization. So this particular part of classification and then preparing a summary based on this classification is done in the second step of accounting, and that is ledger. So we can say that ledger is like a secondary book of accounting. And in this, if you just have to think of a journal, let's say in the journal you had written cash 10 times, cash purchase, cash sales, cash paid for, stationery, cash deposited in bank account, and so on. So a number of times that word cash has come, or the account cash has come into picture. Let's say also at the same time in the same month you made sales 10 times. So 10 times you have written the journal entry of sales. So now if I ask you at the end of the month, how much was your sales? How much was the sales for that particular month? Let's say for the month of April 2024. How much was your sales? So how would you answer it? The answer would be like, okay, now you have to sit with the journal and then you will hunt for all the entries which had those sales. And then you would to take the total of those sales and tell me the amount of sales. Think of how much time it's going to take. Like, it will be a massive job for you. And if you're talking of a multinational company or a huge company which has made 100 invoices or 5,000 invoices in a day, it will be such a huge task. Accounts cannot be like a process which can't give you quick results, because you have to take certain decisions based on those results, based on those, you can say, amounts and figures and numbers that the accounts are giving you. So for that purpose, ledger is a very crucial area. So when you make a journal entry, what happens? It gets segregated, it gets separated into different accounts in the format of a ledger. So as soon as I say, okay, how much sales did I make in that period, I will open a account which is the sales account in the ledger, and I will get a quick summary of the entire sales for that month or for that week or for that day, whatever the case is, and I will tell you, okay, this was the sales for the month of April 2024. So it will be very easy. So what is the job of the ledger? The ledger is doing a summary. So it's collecting all the printing and stationery figures and amounts under one account in one single page, one single account, you can say, and then you can take a total and tell the balance, right? That is what is the job of the ledger. So it is doing the work of classification and summarizing. Then another important thing that the ledger is actually doing is basically helping the transition from the journal to the preparation of final accounts. So while preparing the final accounts, an important thing that you need is a trial balance. And this trial balance is given with the help of a ledger. Okay, so hopefully this part is clear. Now let's see the definition. What is the traditional definition written? If you just read through it, a ledger is containing accounts in which all the transactions of a business enterprise or other accounting units are classified either in detail or in a summary form. So basically, it's containing accounts of the business transactions in the format of what? It's classified in a detail or in a summary form. So that is the traditional definition by E.L. Kohler, Dictionary of Accounts, right? So basically now let's move ahead to the next part where we are talking about the importance of the ledger accounting. Now, based on what I just mentioned, you have understood that the ledger is important for the purpose of summary preparation, for classification of different accounts, and understanding very quickly, immediately, that how much was your sales for the period, how much was the stationery expenditure for that period, and so on. Okay, so that is the purpose of the ledger, condense form of the summary, right? And secondly, it's a book of accounts which is used for the purpose of preparing the next step of accounting, which is in a very precise summary which is prepared of all accounts, and that is what we call as the trial balance. We'll come to that later, but just remember the next step of accounting after ledger would be the trial balance. So that is where your ledger accounts are essential and important. Then next part is absolutely necessary for preparation of final accounts, because ledger will lead you to the trial balance and trial balance further leads to the final account. So the steps cannot be ignored. And as I told you, that when you have a summarized format in front of you, classified format in front of you of different accounts, you can take certain decisions. I will say that, okay, compare the sales figures for the month of April and May. Then how will you find out? You'll say, okay, take the ledger. Ledger shows me the figures for sales of April. Ledger shows me the amounts for the sales of May, and I compare and take a decision. The decision could be that I have to increase my marketing because my sales figure has dropped in the month of May, or I am doing good and I can increase the sales further in the month of June if they have risen from the month of April to the month of May. So in this way, you can take some decisions connected with the business based on the ledgers that you have. And finally, based on all this information that you have, the financial position of the business can be depicted to a certain extent. It's not fully, because that depiction is done by the final accounts, which is in connection with the trading profit and loss account and balance sheet. But right now, remember that ledger serves a certain purpose for the purpose of your financial statement analysis, or rather financial position analysis. Got it? So this is how the ledger is important from the angle of accounting. Now let's see the format of the ledger. How does the ledger look like, right? This is the format of the ledger. On top here, you are going to write the account name. Remember, this is the format, but above the format, you will be also writing the name of the account. Like let's say cash account, bank account, and typically we write in the books of so and so. That is also written. Fine. If you see, the ledger has two sides. One side is the debit side and second side is the credit side. So the left hand side, which is the debit side, has columns date, particulars, journal folio. JF is journal folio, and amount in rupees. Same columns are repeated for the credit part of the ledger. If you see date, particulars, journal folio, and amount in rupees. So this is how the ledger looks like. Now, if you see on the debit side, everything will start with 2, right? 2 cash, 2 bank, 2 sales, whatever. So whatever we are going to write on the debit side, it's going to start with 2. And whatever we are going to write on the credit side, that date, particulars, journal folio, amount column of credit part, that part will start with by, B-Y, by. Okay. So this is how the format of the ledger works. So with this format, you will prepare the different ledger accounts based on the journal entries that you have done. Fine. So hopefully this is understood. You have to probably keep this in mind, because you'll have to recollect this format as and when you have to prepare the ledger. You cannot help forgetting this format. It's very simple, but you will need to memorize this a little before we go ahead to the actual solutions and illustrations of ledger accounting. Fine. Now, whenever we are writing the ledger accounts, if you read this heading, it says posting of entries. So when I write the ledger, it's called as posting the journal entries into the ledger. So this terminology is important in accounting. When I say post these accounts into the ledger, that means you should understand what you're supposed to do, right? It's done from the journal to the ledger. Then necessary number of ledger accounts are to be opened. So in a journal entry, if suppose I say the journal entry is cash account to sales account. How many accounts are here? Cash account is one account and sales account is second account. So two accounts are in this journal entry and we will open two ledger accounts. Fine. So based on how many different types of ledger accounts are present when you're writing the journal, you are going to prepare those many ledger accounts. Fine. So first what you are going to do is you are going to look at the journal, and from the journal you are going to now post these transactions into the ledger. Correct. Necessary number of ledger accounts are to be opened, and then when you have to post that particular entry, it will always have two effects. Remember, accounting which system which we are following is double entry bookkeeping system. So in double entry, dual aspect of accounting works. Every single debit will have an equal amount of credit, right? So every debit part of that transaction will also have a credit part of the transaction. So one ledger account will have a debit and another ledger account will have a credit. Got it? So this is what we say, each entry will have two effects, debit and credit, and these will be equal. Next part is, if at all there is some opening balance. Suppose I say, see, if you're talking of accounting year starts on 1st April and ends on 31st of March. So that is the time period for the accounting purpose. Now, whenever I have to close my books of accounts on March 31st, what happens? This particular balance has to be carried forward. I cannot say this is the end of the entire accounting that I've done. No, I have to still keep accounting in the next financial year. So what to do of the previous financial year balances? I will carry forward. So suppose I have cash in hand on 31st March of 5,000. Will I say, okay, now forget about this cash. I'm going to start fresh from 1st April. No, it cannot be, right? You will have to take this 5,000 rupees of cash in hand into consideration as an opening balance on 1st of April. Last year, you had this balance in hand, which was called as what? Closing balance. And this closing balance gets carried forward to the next year, and that next year is a new year. So it starts on 1st April saying it is an opening balance. So wherever opening balances are given, those will also be considered while writing the ledger accounts. How we do it, what is the format, everything I'm going to explain ahead. Just be patient enough. Right now, just remember this particular part, that opening balance given is also recorded. Clear? Now, at the end of the accounting period or any decided time period, you will close the ledger accounts and carry forward the closing balances. What is the meaning of close the ledger account? Close the ledger account is basically, let's suppose on a specific day, I want to know how much of sales I made. I will need to take a total, right? So this is what I do at the end of that time period. It could be a day, it could be a week, it could be a month, it could be a year, whatever I've decided. I close the ledger account on that specific time period and match the two parts and then find out whether there is any balance to be carry forward or not. Fine. This is just a theoretical part. When we do the illustrations, you will understand it more clearly. Okay. So this is how posting of entries is done in the ledger. So if at all you get a question saying, what is the meaning of posting? How is posting done in the ledger accounts? These are the points that you will have to remember and write as the answer. Okay. Now, balancing, next area of the ledger that we are going to talk about is the balancing of ledger accounts. Now, balancing of ledger accounts, I'm not going to explain in detail in this theory part. I'm going to explain it with examples ahead. But right now, remember the steps. The steps are, we will take the total of both sides, debit side, credit side, we will take the total. Then, what is the next part? Next part is, if I have both sides totals. I'm going to match them. Then whichever side is less, I will write the balance on that particular side and close the ledger account. Carry forward that particular balance to the next year, next month, next week, whatever the decided time period is. The closing of the closed balance or the closing balance of the ledger accounts will be taken as the trial balance account, right? So in the trial balance, I'm going to take these closed ledger entries or closing balances of the ledger accounts. I will take it to the trial balance, right? Remember this. Now we'll proceed ahead and see the illustrations on the ledger. Without the illustrations, you will not find any clarity on the ledger. We will take examples on the ledger account, and then we will proceed to a little bit more deeper understanding of the ledger. Okay, so let's proceed. We are going to take a very simple illustration now on ledger accounts. This is illustration 1, where we are just having two transactions. And what they have asked to do is basically prepare the journal and ledger accounts of PQR Enterprises for the month of June 2023. So based on this, we will first be recording the journal, and then we will be posting these in the ledger accounts of PQR Enterprises. So let us write the journal of these two transactions so that I can tell you and explain to you how you are going to post these entries into the ledger accounts, right? So take the first entry. In whose books are we writing? PQR Enterprises. So I go to the journal in the books of PQR Enterprises. Now, which month am I writing? It's written in the month of June 23. So date I'm going to put here June 23. And what is the timeline? It is 2nd of June. Started business with cash 1 lakh. So business is started with cash. Cash is coming into the business. Cash account will be debit. Real account rule 1 lakh. And 2, naturally it's going to be capital account. So capital account, we don't know the name of the proprietor. So I'm just going to write capital account 1 lakh rupees. Right? Being business started with cash. Next step is I'm going to write the second journal entry as required. So the second journal entry I'm going to write. Second journal entry is on 3rd. Deposited 10,000 into IDBI Bank Limited. So on 3rd, cash is going out and bank is the receiver. So bank, I'm going to write here IDBI Bank. Basically, I have the bank's name. So I'll write the name also, IDBI Bank Limited, or IDBI Bank account debit 10,000 to cash, because cash is going out of the business. Cash account 10,000. And being cash deposited in bank. Or I can just simply put it cash deposited. Right? These are my two transactions of the journal. Now we are going to move ahead to understand how I am going to actually summarize these transactions, classify and summarize these transactions and write the ledger account. Now, if you see here, we have different accounts. Which are the different accounts in this particular case? The first account is cash account, second account is capital account, and third account is IDBI account. This cash account is again a repetition. So basically, I'm going to take cash account, capital account, and IDBI bank account. These are the three different accounts that exist in this particular journal. So this is the first step of the ledger. Identify the different number of accounts that you need to prepare. So remember, ledger is going to be each account separate. That means one account will be the cash account, second account will be the capital account, third account will be IDBI bank account. Now, if I've already prepared cash account, I don't have to prepare it again. Fine. So this is one thing, 3 accounts I'm going to prepare. Now I have the ledger format prepared here, and I'm going to write in the books of whose books am I writing in? Let me put the name of that particular enterprise, PQR Enterprises, here also. So ledger is being prepared for PQR Enterprises, right? And I'm going to write here ledger. And what is the format of the ledger? Ledger has two sides, debit and credit. If you remember, first part will be date, particulars. Then this will be the journal folio, that is the number, page number of the journal from where this entry will be done. Then amount in rupees. Then again the same part, date, particulars, journal folio, and amount. And amount again in rupees. Okay. Now, how many ledger accounts did I identify? If you remember, I identified 3 accounts. One account was the cash account. So I'm going to write here the heading as cash account. Fine. I think I have 2-3 transactions which will be connected to cash account. So I leave some space, and then I'm going to make another account. I'm going to draw up another ledger account. This is how you are also going to prepare with me. So this is the second ledger account. Now another one, I need third account also, because cash account, then there is capital account, and third account which I need is IDBI bank account. So there is a third ledger account which I am preparing and drawing the same format. Fine. So this is how I'm going to write. Cash account is done. Second account which I'm going to write is debit and credit. And that account name is capital account. All right. Then the third account which I have is debit and credit, again, two sides. And this is the IDBI bank account. Fine. So these are the 3 accounts. So what I've done, if you remember from the journal, I first identified how many number of accounts I need to prepare. I know the ledger format. So the same format, I'm going to prepare these 3 accounts. Okay. So basically here again, you will have to write date, particulars and all. I'm not writing it here because we already have it on top. But every time you write a ledger, you will have to write date, particulars, amount, date, particulars, amount, everything, right? Now, how to post the journal entry from the journal into the ledger. This is what we are going to learn. Now, first thing, what is my transaction? Go to the transaction, and if you can see here, the transaction is saying cash account to capital account. Now, always remember, when I'm posting in the cash account, I'm not going to write cash account. Fine, because I already have the heading as cash account. So I'm not going to write again cash account. In the cash account, I need to show that how this cash was brought into the business. How is this cash brought in? By way of capital. So when I'm writing in the cash account, when I'm posting from this journal to the ledger, what I'm going to do is go to the cash account's debit side. What is cash here? It is debit. So I go to the debit side of cash account and write the remaining transaction, which is to capital account. So go to the cash account, debit side of cash account. Again, I'm writing your date, June 23, 2nd of June, and write the remaining part of the transaction to capital account, 1 lakh. Fine. So what I've done, I have the journal entry. Journal entry says cash account debit. So cash account debit side. What I'm writing here, the remainder part of the transaction, the opposite part of the transaction, that is to capital account. Got it? Now this doesn't end it. Fine. Because always in double entry bookkeeping system, there are 2 parts of that transaction. One is a debit and one is a credit. What effect I'm giving now is the debit effect. Cash account is debited. But what about the credit impact? Where is the credit? Go to the journal. If you see the credit part is in this side. This is the credit. That is, capital account is credited. So what I will do now is go to the capital account. On the credit side, I'm going to write in the date column June 23, 2nd of June. And what is the remaining part of the transaction? Capital account is credited, fine. But what is debited? Cash. So I'm writing here by cash account, 1 lakh. Now there are some times in some textbooks or sometimes you will find that here again a narration is written. Okay, it's not necessary but to write a narration in the ledger. But if the textbooks or your syllabus insist that you write the narration, then please write the narration below the capital account saying that, okay, cash is brought into the business, whatever the case is. Okay, I'm not writing the narration here because it's not required. So let's put it, debit is cash account. I write the remaining part of the transaction. Credit of that same entry is the capital account. So I show on the credit side the remaining part of the transaction, which is cash account. Fine. So this completes my first journal entry. Now I move ahead to the second journal entry. The second journal entry says IDBI bank account is debit and cash account is credit. So on June 3rd, what is happening? IDBI bank account is getting debited. So go to IDBI bank account debit side. Okay, this is my debit side. Date, particulars, I'm writing just for your information, particulars, so that you don't get confused. Journal folio, amount, rupees, then again date, particulars, journal folio and amount. Okay. Now, wait, for this particular transaction, what is happening? IDBI bank account is getting debited. On which date is it getting debited? June 23rd, or basically year, and it is on the 3rd of June, right? If you see the transaction, it is happening on which date? It is happening on 3rd June. IDBI bank account is debited, and always on the debit side, I'm going to start it with 2 cash account, right? 2, the starting point is 2 and then write the remaining transaction, which is cash account. Amount deposited is 10,000. Now, does this end the transaction? The answer is no. We have given the debit impact of that particular account, that is IDBI bank account. Now I am going to give the credit impact. How to give the credit impact? If you want, simply go to the journal entry, see what is your credit side. Credit side is cash account. So I'll have to go to the credit side of which account? Cash account, and write the remaining part of the transaction, which is IDBI bank account. So go to the cash account, credit side of cash account, June 23rd and 3rd of June. It is basically starting of credit side always is with by IDBI bank account. So remaining part of the transaction I'm writing by IDBI bank account, 10,000. Fine. So this completes my second journal entry. I've given the debit impact here and I've given the credit impact here. What happens if one of this goes missing? That means I just write the debit impact, but I don't write the credit impact. Then you will make a mistake in accounting and your debits and the credits will not match. Further on, whatever accounting you're going to do will be incomplete, will be wrong. Okay. So this is very important to remember. Don't miss out on any of the debits or any of the credits in that particular transaction. Now, the interesting part of ledger accounting is the closing of the ledger accounts and finding whether there is any closing balance in that account. What have we done now? This step that we have done till now is called as posting to the ledger accounts. Fine. Now we go to the next step. The next step, the first step was posting to the ledger account, just for your information. And second step that we are going to understand is called as balancing of the ledger accounts. Right? This is what we are going to do, balancing of the ledger accounts. What is balancing of ledger accounts? Now, balancing is just like the balancing act. If you remember, if you see the weigh scale, what happens? One side you put, let's say a kgs thing, and the second side, the weight is put on one side of 1 kg. The second side you put the product. If the product is not weighing 1 kg, it will be upwards, right? If on the other side, if you put 1 kg weight on one side and on the other side you're putting the weight of that product, which is, let's say, 2 kgs, then that product side will go down. So this is how the weigh scale works. Fine. Same way in the ledger, we have one side which is the debit side and another side which is the credit side. I'm going to balance these two, check whether they are equal or not. Take the total of your debit side. How much is the total of debit side? If you see here, it is 1 lakh. If you see the credit side total, it is 10,000. Which side is more? Of course, the side of 1 lakh is more, the debit side is more. So basically, you will have a balance in the ledger account, which is debits, right? If we say what is more in that account, that will be the balance in the ledger account. What is more? Which side is more? In this case, the debit side is more. So you will have a balance of debit. Now, on the credit side, you have just 10,000. So basically, if you see these two, you have to calculate the difference. And the difference is 90,000. So 1 lakh minus 10,000 is 90,000. Now, if I write this, what I have to do is I have to balance. That means I have to make both sides equal, right? So if I have to make both sides, the debit side and the credit side equal, which side do I need to write? I need to write on the credit side 90,000, then only I will have both sides 1 lakh rupees each. Fine. So always remember, now on the last day, I'm going to balance it. So if you're not told when to balance the ledger account, you're going to balance it on the last day of the month, which is in this case, 30th of June. So I'm going to write here by balance carried down. C oblique D means carried down. How much is the balance that I'm going to carry down or carry forward? Sometimes you even write carry forward CF, right? Which is 90,000. So basically, if I write 90,000 on the credit side, I will find both sides become 1 lakh. Now I'm going to balance it, show it as 1 lakh each. Right? This is how I'm going to close the ledger account. Closing of the ledger account means I'm basically writing both sides as 1 lakh each and putting the balance on the side which is less. Now this doesn't end the balancing sequence. What I have to do now next, this balance is still there, na, 90,000. Next month, in the month of July, right, July 23rd, on 1st of July, I'm going to bring down this balance into the account. To balance brought down, or some people will also write as carried down. This is 90,000 here. So now again, if I make some expenses, again, if I earn some income, I'm going to keep writing here and keep balancing it on a specific date. So this particular balance carried down, is this balance which is carried down a debit balance or a credit balance? The answer to this is it is a debit balance. Why? Because this side is more. What is remaining? If I say this particular side is like mangoes and the credit side is like, let's say, apples. Which is more? Is mangoes more or apples more? The answer is mangoes is more. So what am I carried down is mangoes. What is the balance here? You will say the balance is of mangoes, not of apples. So if I'm carrying down, it will be the carry down balance of mangoes. Now instead of mangoes, if I write debit, and instead of apples, if I write credit, Now tell me, what is the balance? Is it a debit balance or a credit balance? It is a debit balance because this side is more. Okay, the debit side is more. Have you understood how the ledger is balanced? Hopefully this makes it clear now to you. Same way, now I'm going to balance the capital account and IDBI bank account. Now here, if you can see, there is no debit balance. But I have to close this account. If I have to close this account, I have to make both sides equal. And how will I make this both sides equal? I will write on the opposite side, June 23, 30th of June, to balance carried down. How much am I going to carry down? It is going to be 1 lakh. So this, since there is no other amount, I'm just going to put two lines, two double lines, show that the account is closed. Only if this is done, only if one single figure is there, I will write two double lines, it's fine. Now this balance is carried down, it will be brought down on the next month. Opposite side. See, it's here and I'm going to take it to the opposite side. June 23rd, 1st of June, by balance carried down. Sorry, by balance brought down. 1 lakh rupees. This is the capital. Next is now IDBI bank account. If you see, debit side is 10,000. Credit side, there is nothing. Fine. So on credit side, I am going to, since I have to close this particular account, I have to write on this side to make it equal. So on 30th June, I'm going to write by balance carried down. Now, if you see whichever side I'm writing, I'm going to take 2 by in accordance. So here, if I'm writing on debit side, I've written 2. Here, I'm writing on the credit side of written. So I'm writing by. So by balance carried down 10,000. Close this account. And on the opposite side now, in the next month, July 23rd, to balance brought down. So whichever side you have written the balance carried down, exactly opposite side I'm going to write the balance brought down. Right? So on 1st of July, I'm going to bring the balance down 10,000. Now, if I have to ask you what is the balance in the capital account, is the capital account having a debit balance or a credit balance? What will be your answer? See, whenever I say balance, balance means remaining. So which side is remaining more? If you see capital account, the remaining side which is there, the side which has more is credit side. So whenever I have to say in this case, the capital balance is a credit balance because the credit side is more. If I have to see the IDBI bank account, IDBI bank account has the debit side more. So I will say it has a debit balance. So this, if I have to write here in the first case, cash account is having debit balance because debit side is more. कौन सा side बचा हुआ है ज़्यादा? This is the debit side. So debit side is more. So it has a debit balance. Capital account, the credit side is more. So it has a credit balance. And third is IDBI bank account. IDBI bank account, if you see, debit side is more, credit side there was nothing. So it has a debit balance. So whichever side is more, the account, the ledger account will have that particular balance. So if I have to say balance, that means whatever is more, which side is more. So cash account generally will have a debit balance. Debit side will be more. You can't spend unless until you have the money. So debit side will be more. Capital account, it will have a credit balance. Giver's account is credit. Here IDBI bank is the receiver. So receiver's account will have a debit balance. Fine. So in this way, you will find that whichever side is more of that ledger account, the ledger will have that specific balance. So cash account in this case has a debit balance. Capital account in this case has a credit balance. And IDBI bank account has a debit balance. Okay. So this is illustration 1. Now we will proceed to illustration 2 in the same way. And then from illustration 2, we will also prepare a trial balance just to show how it is prepared. We are going to take it in detail later. But just a simple understanding of the trial balance we will take in illustration 2. Okay, we are going to fine. We are going to start with illustration 2 now. In this illustration also, we are asked to prepare journal and ledger of Manju Enterprises for July 23. This particular time period, they want us to prepare the journal as well as ledger of Manju Enterprises. So as in the previous example, we had first prepared a journal. We have written all the journal entries and then we posted them to the ledger account. Same way, in this case also, we are going to prepare the journal. So let's quickly write the journal and then proceed to understand how we are going to post that journal entry into the ledger. So first transaction, we are going to first of all write in whose books? In the books of Manju Enterprises for the month of July 23. So let's write in the journal in the books of Manju Enterprises. Prepare the format and then write in the books of Manju Enterprises date. It's for July and July 23. What's the date? Second, Manju, the proprietor, has started business with cash 1 lakh. So business is started with cash on 2nd. So cash account is coming in. Cash account is debit 1 lakh. And to Manju's capital account. Being business started with cash. Now, the second transaction, let's proceed to the second transaction. Bought goods from Akshay 5,000. On 3rd, goods are being purchased from Akshay. So, purchases account debit 5,000 to Akshay's account because we have not paid him. So, still it is on credit. So, Akshay's account 5,000. Right? Being goods purchased from Akshay or goods purchased on credit. Fine. This is the second transaction that we have done. Third transaction. Now let's proceed to the third journal entry. It's saying paid Akshay 2,000. On 4th, we are making a payment to Akshay. Akshay is the receiver. So Akshay's account debit. How much have we paid? 2,000 to cash account. Since they have not given by bank or anything, we have to assume it is paid in cash. So being cash paid to Akshay. Or being cash paid. Nothing else also is fine. So this is the third transaction that has happened and we have written in the journal. Fourth transaction has happened on the 5th of July. Sold goods 3,000. So 5th July, that's the last transaction. 5th July, sales are happening and we are not given any name or something. Have we given? No. Sold goods 3,000. So cash account 3,000 to sales. To sales account 3,000. Fine. And I'm going to write here into brackets being goods sold. Fine. So our journal entries are done. We have 4 journal entries that we have prepared. Now understand that from these journal entries, we are supposed to now proceed to the next step, which is classification and summarizing, which we are doing in the case of the ledger. So for this purpose, what we need to first do is identify how many number of accounts can you find in this entire journal entries. Let's count. The first account that we have is the cash account. Second account is Manju's capital account. Third account is purchase. Fourth account is Akshay. Again, there is Akshay account. We don't need to prepare it again. Cash account already we have. We don't need to prepare it again. Cash account again we already have. Sales account we don't have. So this is our fifth ledger account. So how many ledger accounts we need to prepare? Five ledger accounts: cash account, Manju's capital, purchase, Akshay, and sales. So now let's proceed to the ledger part of this particular, you can say, illustration 2, and write the ledger accounts in the books of Manju Enterprises. Heading will be ledger or ledger accounts. If we say debit and credit, date, particulars, journal folio, amount, which will be in rupees. Again, I'm repeating the columns for credit side: date, particulars, journal folio, and amount, which will be again in rupees. Fine. So this is the ledger accounts. Now, how many we have identified? We have identified 5 ledger accounts. So let me rule the 5 ledger accounts, draw the 5 ledger accounts. The first account that I have is the cash account. So cash account, maybe I need 2-3 lines for the cash account. So first account I'm writing. Second account. So let me put your cash account. Second account, second ledger account is the capital account of Manju. So Manju's capital account. Then third account. Third account is of Akshay, and basically we are buying him from him. So purchases. So I can also write it as purchase account, and Akshay's account is the next account we'll prepare. So debit and credit. This is purchases account. After purchases account, I have Akshay's account, right? So again, your debit and credit side for Akshay's account. And finally, I also have to take care of the last account. And the last account is what? Sales account. Fine. So I have now all the ledger accounts drafted here. And now I'm going to proceed with the posting of the different journal entries into the ledger. Fine. Now I'm going to take the journal, and one by one the entries I am going to post into the ledger accounts. What is the first particular entry that I have? I have cash account to Manju's capital account. Now what I have to do is I have to use the simple trick that whatever account is debit, go to the debit side of that account and write the remaining transaction. Okay. So in this case, cash account is debited. So I go to cash account debit side, go to the cash account debit side and write the remaining part of the transaction. This is on July 23rd, on 2nd of July, I'm writing cash account, right? So in cash account debit side, remaining part of the transaction is to capital account, right? And it's Manju's capital account, I think. Sorry. So I will write to Manju's capital account. 1 lakh rupees. Now, does this end my ledger posting for the first transaction? No. I have written the debit side. Now I have to write the credit part of this transaction. Now, what is the credit part of this particular transaction? Go to the journal. You will see the credit part of this transaction is this, Manju's capital account. Now, credit part means I have to go to Manju's capital account credit side. Fine. So on credit side of Manju's capital account, I will write the remaining part of the transaction. And what is the remaining part of the transaction? It is cash account, right? So go to Manju's capital account, credit side. I will write July 23 on 2nd of July. And when I start on the credit side, I always start with buy. Buy, what is the remaining transaction? Buy cash account, 1 lakh. Fine. So this completes my first journal entry posting into the ledger. One side, if you see, it is debit side, and second side, if you see, it is credit side. So this side, fine. So that clarifies the first entry. Now go to the second transaction. Second transaction in the journal says debit is purchase and credit is Akshay. So whenever I'm writing the first account that I have here, the debit account is purchases account. Go to the debit side of purchases account. If the purchase account is debited, I will have to go to the debit side of purchase account and write the remaining part of the transaction, which is Akshay account. Okay, so go to the debit side of purchase account. Right there, July 23. What is the date of July that we are writing? It's on 3rd of July. And what's the remaining transaction? To Akshay's account or Akshay's account. Okay. Amount is 5,000. Next is now, this is the debit side, debit part of the transaction. Now, what is the credit part? The credit part is related to Akshay account. Akshay's account should be credited. So on Akshay's account, credit side, 5,000, I'm going to write the remaining transaction. What is the remaining transaction now? For Akshay's account, the remaining transaction will be the purchase account. So go to Akshay's account. Since Akshay's account is credited, go to the credit side of Akshay's account. On credit side, write July 23. On which date? 3rd of July. I have what? Purchases. Buy purchases account. Amount is 5,000. Fine. So what I've done, one side debit, one side is credit. If you see, it's opposite. And in purchase account, I write the remaining part of the transaction. In Akshay's account, I've written the remaining part of the transaction. If Akshay's account is credited, I will write it on credit side of Akshay's account and the remaining part of the transaction. Got it? This completes our second journal entry. Go to the third journal entry. Now, what is the third journal entry saying? It is saying Akshay's account to cash, right? Akshay's account is debited on 4th of July. Again, here I'm going to write on Akshay's account debit side July 23rd. It is on 4th of July to cash account. How much are we making the payment? 2,000, right? To Akshay's account, 2,000 and cash. So cash account, I go to cash account. Go to the credit side now. Why? Because in the entry, if you see cash account is credited. So on credit side of cash account, I need to go and I will write the remaining part of the transaction, that is Akshay. Okay. So here July 23rd, on which date? It's on 4th of July. Buy Akshay account. $2,000. Fine. So we paid. So one part of that payment entry, Akshay's account debit, was taken care of. Credit side of that transaction was related to cash. So I wrote on credit side of the cash account and the remaining part of the transaction was written. Right. So Akshay's account I've written here. Now this completes our third journal entry. Now the last journal entry is saying that you have cash account to sales, right? So cash is debit and sales account is credited. So cash account we will have to take into consideration on 5th. Cash account is debited. So go to the debit side of cash account and write the remaining part of the transaction. On which date? 5th, to sales. To sales account, right? So what is the remaining part of the transaction? It is sales, 3,000 rupees. Now sales account is credited, right? So sales account credit side, I go July 23rd, on 5th of July, buy cash. Amount of cash is 3,000. Got it? So basically your cash account is debit, sales account is credit, and just to post it, I'm going to post the remaining part of that transaction on the credit side. So if I have to read now this entry, how will I read? I will start with cash account debit 3,000 to sales account, because credit is what? Sales account. What is debited? Cash account. Got it? So this is the posting part of ledger accounts is over. The first part is over. Now what remains? Tell me. It will be basically the part of balancing. Okay, so I need to check which side is more and which side is less, and accordingly I will have to balance the ledger account by placing the amount on the side which is less. So which side is less? Check. In the case of cash account, if you see the debit side, it is 1 lakh plus 3,000. So 1 lakh 3,000. On the credit side, it is 2,000. So the credit side is less by an amount of 1 lakh 1,000. Got it? So if I have to balance this particular ledger account, I will have to show it on 31st of July on the credit side by balance carried down. 1 lakh 1,000. Close the account by drawing these double lines and taking the total 1 lakh 3,000 on this side and 1 lakh 3,000 on the other side also. Fine. Now this doesn't end the matter. The balance, which was the debit balance, because debit side is more, so this ledger account, cash account, has the debit balance. This debit balance is to be carried forward to the next month, August 23rd, on 1st of August, to balance brought down. And that amount which is remaining is 1 lakh 1,000. Got it? This balance. This balance is carried down here. Hopefully this is clear. So why am I saying now this particular ledger account, cash account, has debit balance? Debit balance means the side which is more is the balance. That much is remaining. So what is more in this case? It is debit. So debit side is remaining, and so it has a debit balance, and that debit balance is 1 lakh 1,000. Now coming to Manju's capital account, which side is more? Obviously there is nothing on debit side, so its credit side is more. So I will have to balance this particular account by writing on the debit side. I will write July 23rd, 31st of July, to balance carried down. And amount that I carried down is 1 lakh. Fine. I close it with a double line showing that this account is closed on 31st July. The part is not over. So this balance carried down has to be brought down in the next month, August 23rd, 1st of August. by balance brought down. By balance brought down. 1 lakh, right? Next is now purchases account. Purchases account, debit side is Akshay's account, 5,000. Credit side, there is nothing. So what balance this purchase account has? It has debit balance because debit side is more. This account has debit balance. Fine. So I write on the credit side of this particular ledger account, July 23rd, on 31st of July, by balance carried down. 5,000. Close this account, draw double lines, right? And then this particular balance on the opposite side, I bring down August, 1st of August, to balance brought down. Amount is 5,000. Next is now Akshay's account. Now Akshay's account has two parts. It has debit part also and credit part also. But which side is more? If you see, it has a credit side which is 5,000 and debit side is 2,000. Which side is less? The side which is less is the debit side. So what balance does Akshay's account have? Akshay's account has the credit balance. Credit side is more, so it has a credit balance. Fine. So now what I have to do, I have to balance this account by writing an amount somewhere such that both the sides will be equal. So if I have to make both sides equal, which side am I going to write? I'm going to write on the debit side of this account on 31st of July to balance carried down 3,000. Right? Close the account, 5,000 on both sides. Fine. Now, to balance carried down, matter is not closed on August, 1st of August. I'm going to write by balance brought down 3,000. Fine. So what is the balance in Akshay's account? The balance in Akshay's account is credit balance. See, if you see a brought down balance, that is excess balance in hand, that is also a credit balance. So Akshay's account has credit balance. The last part of this posting is the sales account. Now, sales account in this case, if you see, it has on credit side 3,000. So sales account is having a credit balance because credit side is more. So now what I have to do? I have to do the balancing by writing on the debit side, July 23rd, 31st of July, to balance carried down. Amount is 3,000. Close this. And this balance now I'm going to bring down on the opposite side in the next month, August 23rd, 1st of August, by balance brought down, and amount is 3,000. Fine. Now, if I have to see the balances in the different accounts, if you see cash account, as I told you, it has a debit side more, so it has debit balance. Manju's capital account is credit side is more, so it has credit balance. If you see the purchase account, it has more on debit side, so it has a debit balance. Right. Next is Akshay's account. Akshay's account, if you see, it has credit side more. So Akshay's account has a credit balance. Whichever side is more, we say that the ledger account has that balance. So if credit side is more, we say credit side, credit balance. If debit side is more, we say debit balance. So in sales account, now you can tell me that it has basically credit side more. So this ledger account will have a credit balance. Fine. Now, once you've got these balances, our next job is to understand that based on the ledger accounts only, we prepare the trial balance. So for that purpose, again, I am going to write, I'm going to prepare the format of a trial balance. Now, how is the format of the trial balance? Trial balance is basically prepared on a specific date. All right. So in the trial balance, let's suppose we decide that we prepare the trial balance on 1st of August. So in this case, 1st of August, you will have to take into consideration the debit balances and the credit balances that exist in the ledger accounts. Okay. So I will take first the debit balances and I will take the second part, which is the credit balances. This is how the format will look like. It is not having any date column. It doesn't have a account as such. It's not an account. It's basically the statement. Okay, so trial balance is called as a statement. Trial balance as on, let's say 1st August 2023 in the books of Manju Enterprises. Now, what is the format? It says particulars, debit balance and credit balance. Now, basically, this, though I'm preparing a trial balance here, don't think that this is what is the only thing we're going to learn on trial balance. I'm not saying that this is the only part we will do on trial balance in our videos. We will have a separate video on trial balance also. But in that case, we will not be drafting the ledger and then posting it to the or putting it into the trial balance, right? So to understand how the trial balance picks up the ledger balances, I'm doing it here. So you will very clearly understand that how this debit balance, how this credit balance has been arrived at when I put it in the trial balance. So let's see how you prepare it. Cash account, if you see it had a debit balance 1,01,000. So I go to the trial balance. I will just write here cash account. I will just list out all the accounts. So what are the accounts? Cash account. It has a debit balance. So I write here debit side 1,01,000. Fine. Second balance which was there was a credit balance of Manju's capital account. And what was the balance? It was 1 lakh. See here, balance brought down 1 lakh. So on credit side, here I'm going to write Manju's capital account. Credit side 1 lakh. Got it? So what I'm doing is I'm just listing out the accounts which were there and I'm putting their respective balances under the head of either debit balance or credit balance depending on what they have. Third account is purchase account and if you see it has a debit balance 5,000. So purchases account, debit side 5,000. Next account is I think Akshay's account, right? Yeah, Akshay's account is credit balance, credit side, I will write 3,000. Akshay account, credit balance, so credit side I will write 3,000. And finally, I have sales account. Sales account also has a credit balance, so credit side I'm going to write 3,000. Now what I will do is I will take the total of both sides. Both sides, if you see, it's going to take the total will be 1,06,000. Here it is 1,06,000. So both sides are matching. So this is the, you can say the part of double entry bookkeeping system, which we can see that the debit balances and the credit balances are matching. So this is how we can verify that whatever we have posted in our ledger accounts is correct. If it was not matching, if I write it on the wrong side of this particular balances, then it will not match. So trial balance is like your, you can say, uh, checking or checking of arithmetical accuracy till the writing of the ledger account. So is your ledger account clearly prepared, debit balance, credit balances are posted correctly or not. So this was just to give you an idea of how these ledger balances are used to put the amounts in the trial balance. So based on this, you can actually check the accuracy of your accounting. So hope this is clear now. Ledger accounts, how we write, how we post to the ledger accounts, how we balance the ledger accounts, and finally, on the basis of these balances, we have the trial balance. Okay. So the ahead in our videos, we are going to do this in much more detail. The trial balance will be done in detail. But ledger accounts, I think this should give you a clear idea of, because it's just a basic, you can say, understanding. It's just like a very technical area of accounting where you just put the debit sides on a debit part of the journal into the debit side of the ledger, and so on. Okay, and then balance it, making both sides equal and carrying forward the balances. So if you do 2-3 questions like this, you will get the knack of it. It's not very difficult. Only thing is just the simplicity of the understanding. One ledger account, how you post, you understand, you will get the idea of the other ledger accounts also. Fine. So not much of, you can say, you don't have to stress your brain much when you're preparing the ledger accounts. Clear? Hope this is understood. Now the illustrations, as I told you earlier, these illustrations will be given as a PDF file in your description, in the description of this video. So if you want to download the illustrations, you can download that PDF which is given in the descriptions of this video and get the questions which we have answered here in the video. Fine. So hopefully you have understood now how ledgers are prepared from the journal entries. So what we have learned first, number one, you have to make the journal entry. Second, you have to pick up the number of accounts that we have in the journal. So different accounts we have, and then draft the ledger according to the format into those number of accounts. And third step, once we have done the drafting and you can say the formatting and everything and preparation of the ledger accounts, what you're supposed to do is to pick from the journal the different entries, the transactions, the debits and the credits, and post them into the ledger accounts. Fine. Once that posting is done, the next step is what? The balancing of the ledger accounts. Whichever side is more, the ledger will have that balance. Whichever side is less, it is not taken into consideration. So when we have a debit side more, we say the ledger has a debit balance, right? Then the next step is, once we balance that particular ledger, we close that ledger on the last day of the month, specifically in our case, then that particular balance is carried forward to the next month. So that also we need to show. So we close that account, we show a carry forward of the balance, and then in the next month, we again bring that balance forward, or brought forward balance we'll have to show. Fine. So this closes the ledger accounts. And once that is done, from these balances which will be picked up at the end of the year or the month or whatever is the requirement of that organization, these ledger balances will be picked up, and what we prepare from that, we prepare the trial balance. And this particular trial balance shows all the debit accounts, shows all the credit accounts, and the debit total should match with the credit total. And that's the end of the trial balance. So trial balance we are going to learn in more detail in another video, but this was just to give an idea of how it is posted from the ledger. Fine. So hope this is clear. Now let's meet in the next video where we are going to learn about subsidiary books. So this is something which is connected to ledger accounting only. So we will learn to prepare the subsidiary books, a few of them which are like sales book, purchase book, sales return, purchase return, cash book, and also we will learn about petty cash book. So these will be a few of the subsidiary books that we are going to learn. And after that, we will take up in detail the trial balance. Okay, so see you in the next video of Commerce Gyan.